right, everyone. Welcome back to Bayou Time. I'm Martin Folse. Very glad to have with us the Commissioner of Insurance, Mr. Jim Donelon, who at this time we're going to have a special session. And Mr. Donelon, first of all, I want to welcome you to Bayou Time. Good to see you again.
Glad to be with you. Thank you, Martin.
All right. Let me ask you this.
And Jim will suffice. There's no Mr. necessary.
All right. Thank you, Jim. Let's start off with the fact that, of course, insurance, we didn't realize how important insurance was till, I think, after Hurricane Ida. We've had many tough times with insurance. We've had many successes with insurance. We've had, everyone's tried to fix insurance for such a long time. It's a tough, tough realm. You went to the governor. I guess you gave him your case why a special session was needed. First of all, let's start off the grassroots. What was that conversation like? And was it a hard sell to the governor, or was it quite an easy sell?
Actually, he was very receptive from the outset and supportive. Gave me some guidance on what he thought we needed to do in order to be successful in this ongoing special session that just started here today. And in fact, as I was going into the meeting with the Democrat caucus a little while ago, he was coming out. And we had a hallway conversation on the latest status of the feeling in the legislature for what I am proposing to address the ongoing crisis in our property insurance market, which those of you in the Houma, Thibodeau area, the Bayou region, are feeling the heaviest burden of the affordability and availability of insurance, both commercial as well as residential. And our bill is designed specifically and targeted to doing just that, granting relief to those who can't get coverage, and even those who can only get coverage in the state-sponsored market of last resort called Louisiana Citizens Property Insurance Company.
Now, let me ask you this, because I fall into both categories. Naturally, I have property. Then I'm trying to insure businesses. But this just isn't a focus on Martin Folse or HTV. We have tons of people in the same realm. And I guess the first question I would like for you to explain is the 10% higher. I think it's a state law. Correct me if I'm wrong. But you have to find the highest person, whatever they're going to be, drafting their policy for Louisiana, and then Citizens goes 10% higher than that. Can you give some clarity to that?
Sure. And the reason for that is Citizens is the market of last resort for property owners who can't get coverage in the private sector. Similar to the assigned risk pool for drivers with DWIs or multiple accidents, speeding tickets, what have you, that can't get coverage from a private company, there's something called the assigned risk pool to provide them coverage. We had a similar thing called the Louisiana Health Plan before the Affordable Care Act was passed here 10 years ago that mandated guarantee issue for everybody in the United States. And the price of guarantee issue was to spread that risk across all of the population and cover everybody for all of the covered conditions that came with the Affordable Care Act equally. And so Citizens, like the assigned risk pool, like the old Louisiana Health Plan, is state-sponsored. The risk is borne by all of us who own insurance policies on property statewide, commercial as well as residential. And we're still paying every year an assessment on every residential property insurance policy, every commercial property insurance policy for 3 more years to finish paying off the bonds that Citizens had to issue after Katrina and Rita, to finish paying a $1 billion bond issue. At the time, the second largest bond issue in the history of the state. And it has 3 more years to go to be amortized. So the law requires that every year Citizens do a survey of all the parishes, 64 parishes. They don't do it based upon the most expensive individual policy. They do it based upon the rates filed by companies actively writing in each of the 64 parishes. Find out what they're charging. The most expensive company, add 10% to it, and that's what they charge to have a policy with Citizens. The purpose of that is to keep it as a market of last resort and not become a market of choice, because frankly, Martin, the state cannot afford to become the insurer for our hurricane exposure in our state. In the past 3 hurricane seasons, for Laura and Ida primarily, we collected $24 billion for insured losses from just those 2 hurricane events in our state.
Yeah, you sort of compared it to like DWIs and different things, but in all fairness, in one case, DWIs are sort of self-inflicted because people choose to drink and drive and get behind a wheel, so they're deserving of what they get. But for homeowners who don't call for a category, and I still call it a 5, a category 5 that comes through this area with winds and just at this station in excess of 160 miles per hour for a long time, we don't ask for that. We don't call for it. So we're sort of at the mercy of the winds and the mercy of the heavens, so to speak. And for a lot of those people to bear the burden of an increase at this time, I just don't know how many people can withstand that or make it happen. So with this special session, I guess the main question, can you fix it? I guess would be the main question.
Absolutely. We can fix it. We did after Katrina Rita. Citizens had 173,000 policies after Katrina came through our state, and Rita 3 weeks later.
It was under Governor Blanco, right?
That's correct. Mm-hmm. It went down prior to Laura to 35,000 policies, from 10% of our market for property insurance to 0.5%, because we attracted a plethora of small regional companies to our market to replace the exiting major national companies that left not just our coastal exposure, but all coastal exposure on the Atlantic and all around the Gulf. So we did it once before with a program just like the one I'm proposing now, called an incentive program. And what it does is it offers grants to companies. In the case of the original Katrina Rita incentive program, the offer was, just as now, $2 to $10 million to a company that would come to Louisiana to write policies specifically under the following rules. They would have to, say, for example, if they asked for a $5 million grant to come write new business in our state, they would have to match that $5 million grant with a $5 million contribution to their capital, to their surplus, equal to the grant, total of $10 million. They would then have to agree to write new business in our state, property insurance business, to the tune of twice that amount, or $20 million. And finally, they would have to agree to stay on that business for a minimum of 5 years. And one other thing, 50% of that new business written in our state would have to be written in the 37 GO zone parishes. You can describe those as the bottom half of the parishes in our state. So from central Louisiana down to the Gulf, those policies would have to be written. And as I said, they would have to stay on those policies for a total of 5 years in order to earn that $5 million grant. Now, each year, they would have the right to claim 20% of that $5 million if they met those writing requirements and stayed on that business for a year. And the next year, another 20% until it totals over 5 years, the entire 100% of the grant that they have received. It worked incredibly well after Katrina and Rita, to the tune of Citizens losing 40,000 of their 173,000 policies just to those 5 companies that came as a result of that incentive program to write new business in our state. And we have 7 companies that have indicated to us that they are willing and anxious to participate in the new incentive program if and when it is created, and well, it's already created, if and when the funding is made available to implement that program.
I got a couple of questions to follow up on that. That all sounds really, really good, and I hope it works perfectly. Do they have, I know it's an incentive for them to come in and write, and that's a great program, but do they have any obligation to write cheaper than Citizens would write? What makes a company come in? You said you had 7. Just pick any of the 7. What gives them, I guess, a mandate to come in and make sure they're cheaper? Is there any method to that?
No, there is no method to require a company to be cheaper. But in and of itself, they will be cheaper because right now, Citizens is already priced at the most expensive actively writing company in any of the 64 parishes, and in particular in the bottom half, 37 go-zone parishes. That's their rate. Their rate is no higher than that company that is currently actively writing in the parish, because Citizens their rates are based on the highest active writer plus an additional 10%. So when they take that policy out of Citizens, it's priced for the duration of the Citizens rate setting. It's priced in accordance with the law that set it at the highest charge in the parish plus 10%. At renewal, those companies will be certainly no longer wanting to charge the 10% add-on, because if they don't get competitive with the rest of the market, they'll lose that business to the other companies that are writing in each of the individual parishes. 40,000 policies were moved from Citizens to these 5 participating companies 15 years ago after Katrina, and we have no reason to believe that won't play out again, because that's just market motivation at work. When companies have an obligation to take on business in order to earn the $5 million we're offering, and to stay on it for a continuous 5-year period in order to earn that money. When we gave out $29 million to 5 companies 15 years ago with the first incentive program, we actually clawed back $4 million of that $20 million from those 5 companies who failed to keep to write and to stay on those policies as required by the program. They all agreed. We monitor them for their writings and where they're writing, and how many came out of Citizens and how many came out of the go-zone parishes. And if they fail to meet all of the requirements for a month or for a year, they lose that period of time toward earning over the 5-year period the full $5 million that they got in that grant that we gave them.
I know part of your assessment, and I tend to agree with it, is fortifying homes, making them stronger. And I think if you ride, I'm sure you have, if you ride down Terrebonne and Lafourche and St. Mary and Assumption and Grand Isle and Fouchon, people lost just everything. So the ones that are rebuilding, they're rebuilding pretty strong. We've seen this throughout history in every storm. Rebuild it better, make it stronger. So now we're rebuilding, I'm gonna just pick a number because I think it's accurate, for about 150 mile per hour winds. And let me ask you, because I know a lot of people, I'm not saying they're against what you're trying to do, because I think everybody realizes we need a solution to the problem. I think there's some on the other side that would say, well, let's take some of that money and let's place it towards giving incentives to the people and giving the taxpayer money back to the people to fortify their home. What kind of word would you have for them on why it wouldn't work or why some of it would work? I don't think people are totally against what you're trying to do. They just might have a different approach.
Well, that's certainly possible, and not only possible, but probable that there'll be multiple different approaches to this crisis. And there is no question but that we're in a crisis. In fact, yesterday, the lead editorial in The Advocate said that time is of the essence. We're in a crisis, and this program has worked before, will work again, and should be approved by the state legislature. And I think it certainly is the best approach. No question about it. Fortified homes, strengthening homes beyond what the building code requires. Our new upgrade to the building code, just implemented January 1st, the beginning of this month, brings us as a building code to 95% of the fortified standard. But the fortified standard is above and beyond that. It's been in place in Alabama, where it was first rolled out, for 5 years now. And over 30,000 homes are now certified to meet the roof standard, primarily roof standard that is called for fortified status. And it really is a very, very important long-term fix to our problem. Living exposed as we are more than any other state to hurricane events on the Gulf of Mexico. So we absolutely have to build higher and we have to build stronger. And we have a program, as was the incentive program, created and authorized a year ago in the regular session, but not funded. And the incentive program is also created a year ago, but not funded. And we are trying to get it funded now out of $45 million out of the $1 billion unanticipated surplus in this fiscal year. And during the regular session, we will be back asking for funding for the grants that are called for in the legislation passed last year to create the Fortified Homes program, copied after the Alabama program. No question, the long-term answer to our coastal exposure is building higher, building stronger. If you do that on Grand Isle, as was experienced with Ida, if you do that on Grand Isle, you can withstand 150-mile-an-hour winds and 3-4 feet of storm surge if you are compliant with those building requirements. And I think that message is going out, and I think there is going to be a lot of take-up of the incentive program, the Fortified program, when we make grants available to them under that program. But for now, the immediate crisis, the crisis at hand is getting people out of Citizens, which not only benefits the 125,000 policyholders in Citizens, who are, by the way, Martin, experiencing this month, January, the latest bylaw required rate increase of 63% on residential property insured through Citizens. And that was already priced at the highest price in the parish, plus 10%. Add 63% to that now because of the increased cost of reinsurance that Citizens had to pay because their book doubled last year over what they had the year before. At Laura landfall time, 35,000 policies. Last hurricane season, an estimated 65,000. And now it's 125,000, which will necessitate, if we don't do as we did after Katrina and Rita and depopulate those folks out of Citizens back to a private company, they are facing yet another 30 to 40% rate increase a year from now because reinsurance will go up that much because the book of business is now 125,000 policies rather than 65,000 that they bought reinsurance based upon for the last hurricane season. So those people are hurting. Each month, another 10,000 of those 120,000 policyholders are hit with that 60% rate increase. I tell you, there are thousands of people in Louisiana who will lose their homes, primarily in the coastal part of our state, because they just can't afford the coverage that Citizens.
That was, I guess that would lead me into, I know you put a lot of thought probably in this special session of just driving the point home that for some of us, and I have to be honest, that can afford to put money on the side and sort of self-insure. And course, a lot of people have the pros and cons to self-insuring. But the bank, for those that have mortgages, the bank says you will be insured. You don't have a choice in the matter. That's a tough pill to swallow for some people who barely could afford that mortgage, and now they're trying to afford the mortgage with the insurance, and they're desperate at this point.
And that's folks in our coast that I refer to as our working coast. It's folks working offshore oil and gas, in the fisheries industry, in the ports, in the offshore port facilities, our new LNG ports that are being built, exporting our gas and liquefied natural gas all around the world, providing jobs throughout Louisiana. Those workers need school teachers and firefighters and policemen and restaurants all across coastal Louisiana. It's not like we're a retirement destination like the high-rise condominiums on the sandy white beaches in Florida. We're a working coast that requires homeowners insurance, affordable homeowners insurance, because if your lender gives you a mortgage and you are with a company and that company leaves the state, goes out of business, goes insolvent or whatever, and you can't get coverage anywhere else but Citizens, then you're paying a much higher premium than you were before. And it may be the difference between being able to afford your mortgage and your home and the insurance for that home and having to sell your place and probably leave our state if it comes to that.
Yeah, let me ask you, because you brought up Florida, and they have, and I guess some people don't understand this, but I think you probably had a chance at one point to talk to Governor DeSantis, and they did some pretty clever things with their insurance, but some people were asking me about that at lunch recently, and I said, I think it all goes back to the state's constitution. I think each state is relegated to what they can do or what they can't do. Was I correct in saying that? Everybody's sort of driven by their own state constitution?
Well, it's not typically a constitutional issue. Sometimes that can come into play. For example, some have advocated for a regional reinsurance program of multi-states with the same exposure. Some constitutions, some state constitutions, limit you to spending your state's resources on and in behalf of your state. You can't agree to bail out Florida if they get hit with a hurricane like Ian through a agreement to reciprocate like that. So constitutional limitations are not common, but there are some situations that they come into play. But we are all regulated or limited in what we can and cannot do by our state laws, our statutes. I'm a regulator, but I can only regulate based upon what the legislature sees fit to empower me to do or to require me to do and prohibit me from doing other things. So they make the rules, I enforce them as a regulator, and certainly constitutional limitations are first and foremost. They can't even be amended by the legislature. They require a vote of the people in addition to the legislative action. So there's limitations, certainly, and some of the ideas that have been floated passed into law in this recent special session in Florida are of interest to me. They tried in an earlier last year special session unsuccessfully to fix their broken system that has impacted us and several other coastal states in a negative way, because companies that were domiciled in Florida, like the one that just was put into receivership on Friday, UPC, United Property Insurance, United Property Corporation, Insurance Corporation. I'm not certain about the acronym, but they had policies in the coastal states of New York, North Carolina, South Carolina, Florida, Louisiana, and Texas. And we've been kept abreast by the Florida regulator over the past year, ever since they were put into supervision, with the hope that they could turn that company around. On Friday, we were notified that it's not going to happen. and now another 15 to 20,000 policyholders are likely to end up in Citizens because there's no private sector of coverage available to them outside of that state-sponsored market of last resort, Louisiana Citizens. So we're trying to address that through this program, which, as they said in the editorial yesterday, worked before, after Katrina and Rita, a one-shot, sunsetted at the end of this year. Whatever money is left over, if the $45 million is not asked for, take it back to the general fund. And if companies don't meet the requirements, as a couple did not last time, claw back the money, give it back to the general fund. It's a very, very well thought out, proven through the experience after Katrina, way to jumpstart our market back into action as it did post-Katrina.
One thing I'm very encouraged by what you said, just a couple of more questions, is the fact that we have, I think you said 7, I could be wrong, I heard 5 one time, or 7. You have 7 companies that are willing to come in and write based on the incentive program. What kind of companies are they?
Well, they're not State Farm and Allstate. They're not interested in coastal exposure. For the most part, they have more in our state than they want. But with that aside, it will be companies with a minimum rating of the equivalent of a B+ AM Best rating. New companies generally can't get an AM Best rating because you have to meet a seasoning requirement that you be in business for a minimum of, say, 5 years before you can qualify for an AM Best rating. But the minimum B+ can be, it's considered equivalent to a Demotech A, and that rating is acceptable to Fannie Mae and Freddie Mac for federally backed mortgages, and that's what Citizens has used as the minimum qualifying rating for companies taking policies out of Citizens over the past 15 years. And I might add, the 5 insurance companies participating in the incentive program last time, none of them failed. One failed, the one that I had my insurance with, failed last year, but that was 15 years after they got the incentive money, and 10 years after the program was finished, shut down, and the money left over, not claimed by companies, given back to the general fund. Having nothing to do with the incentive program, the failure of Southern Fidelity was totally unrelated to their participation in the incentive program, and was primarily driven by their losses in Florida as a result of what Governor DeSantis addressed in his just concluded special session.
Final question, what's your gut? I know you've been around these legislators for a long time, and you got a pretty good feeling. And I always say, that's why I always try to get all sides, but all the sides really come to a big old gumbo in the state legislature. You're talking with people that are for or against, but some right on the fence. They just need a little swaying to come over. What's your gut? Where are we going to end up? Does this have a chance, or is it a long shot? Let's play the numbers game if we could.
Hello? Hello?
Yeah, you there?
I lost you there for a second.
Let's just play, I'm just looking for your gut on where do you think this is going to end up at the end of the day? How much persuasion or sweetening of the pot are we going to need to get a fix on this?
A lot of persuasion. I'm hearing a lot of doubt and questions and uncertainty. It's always a heavy lift to try to give money to insurance companies. Nobody loves an insurance company. The only way, unless you work for one, the only way you win in the insurance world is by losing. You die, or you have an accident, or you go in the hospital, or your house catches on fire. It's always a bad thing that you have to call upon insurance to help you out through. So again, they're not popular to give money to, but we give money to lots of corporations to attract jobs, to stimulate our economy, to produce things that are necessary for for our state's well-being, and insurance is one of those. It's a private business that for now is pulled back from what they saw the last couple of hurricane seasons with large losses. So we have to entice them back into our market and convince them again, as we did 15 years ago, that we can be profitable. One of the things that I tell the companies is, look, come to our state. Our coastal state is the best market available to you, better than North Carolina, South Carolina, Florida, Texas, because everybody from Texas to Mississippi that needed a new roof has gotten one, and for the most part, and you paid for them. So take advantage of that investment you made in our market by paying your claims and letting people improve their property to where most of it, the overwhelming majority of it, is now covered with a new, stronger than before roof. And they nod in agreement with that when I make that point. So that's what the incentive program is designed to do. It's to get them to take another look at us, perhaps put their toe in the water and come back and do business on in our state that will benefit the particularly, as I refer to them, those folks in the coastal area who are most vulnerable and lower than the top echelons of income. Because if they were high income, they probably have a policy from the private sector. If they're working class folks, then they're oftentimes dependent on citizens to get their coverage, and it is prohibitively expensive to where the economy of our state cannot flourish, cannot grow if that's the only insurance coverage available. And finally, the state can't afford to replace citizens and take that on itself. I've heard it said that we need to make citizens the State Farm of the Bayou. We can't afford that. It would be ruinous to the state if it became the insurer, as Florida had tried to do and has now reversed itself in this most recent special session to get it out of Citizens being its largest property insurer in that state.
Well, Jim, I appreciate you joining us. I've often told you, you have a very tough job. And of course, after hurricanes like Ida come through, your job gets very tough. And I'm sure y'all are trying every means possible to help some of these families out. And all we can hope is that God's your co-pilot when you go through this legislative process, and that everybody comes to a realization and tries to find some common ground where it can help the people, especially the people, the blue-collar people like you talk about that can't afford these premiums. And God bless you, and I wish you luck going through that session.
Thank you so much, Martin. And thank you for the opportunity to have this dialogue and engage on these issues for the benefit of your viewers. I appreciate it greatly.
All right. Thank you, Mr. Donelon. Take care now. All right. There you have it. The insurance commissioner, like I said before, has a very tough position, and some things aren't always clear. You got to ask questions, and if you really listen to the answers, everybody thinks sometimes there's ironclad answers when it comes to any topic we talk about. And of course, I always invite people who have a different opinion to come on. We continue to do that. Y'all know where to find us in case you don't, 985-876-3456. We love to talk in a nice way. Get your point across. You can hear everybody has a difference of opinion on every topic, but as long as they come on and they explain it and they have a difference of opinion, but they do it in the right way, that's what we want on this set, and that's what we hope for. So we'll take a short break. A lot more on Bayou Time. Keep tuning into our channel, also our Facebook and our YouTube, because like this interview, we'll run the whole thing on Facebook and YouTube, so you'll get a chance at your own leisure to watch the entire program. Thank you for joining us. We'll see you around the corner.